Morning, good afternoon, and good evening, and welcome to our quarterly AFC Fund webinar. My name is Thomas Huger, and I'm the CEO and founder of Asia Frontier Capital. With me today are Ruchir Desai in Hong Kong, who is managing with me the AFC Asia Frontier Fund. Ahmed Tabaqchali, the chief strategist of the AFC Iraq Fund, is today in Baghdad. Scott Osheroff, the chief investment officer of the AFC Uzbekistan Fund, who is normally based in Tashkent, the capital of Uzbekistan, and Vicente Nguyen, the chief investment officer of the AFC Vietnam Fund, who is based in Ho Chi Minh City. This webinar will last about 45 minutes, and thereafter you will have the opportunity to ask questions during our 15 minutes Q&A session after the presentations. You can submit your questions online through the Q&A icon at the bottom of the Zoom window on your laptop, PC, or mobile phone. The world and the financial markets experienced some significant events since our last quarterly AFC Fund webinar at the end of July. We have now two major armed conflicts near Europe. Gold traded above $2,000 per ounce for a short moment a few days ago, and the 10-year US Treasury yield was close to 5% at the beginning of this week. Ruchir will provide us now with the investment outlook for the Asian frontier markets and especially for the AFC Asia Frontier Fund. Ruchir, over to you. Thank you.
Thank you, Thomas, and welcome everyone to another quarterly webinar from AFC. And as Thomas correctly mentioned, it's been a pretty volatile time in the last few months and also for the year, given what's going on globally. But I think Asian frontier markets actually have been quite impressive so far this year, as the slide shows you. It has a very strong year so far this year, in fact, extremely strong year for Asian frontier markets, with actually the AFC Asia Frontier Fund being up about 19.3% year to date up to September 30, 2023. But besides that, I would say many Asian frontier markets have significantly outperformed global markets and also especially their peers in Asia, especially the emerging Asia region. So of course, Iraq is up. These are total returns in US dollars. Iraq is up about 87%, and it is basically the second best performing market globally after Argentina. Sri Lanka is up about 60%, and Kazakhstan is up about 27%. So all these three countries are in the top 10 performing markets globally, despite what's happening, in the Middle East and the US Fed and all the noise in Europe, etc. Of course, Vietnam and other markets also have done pretty well. But if you compare to other emerging markets in Asia, I don't think excluding India, I don't think any other Asian market has actually performed this year in this part of the world. Of course, we know what's going on in China, but even the ASEAN countries, excluding Vietnam, Indonesia, Philippines, Malaysia, Thailand especially, haven't performed at least from a stock market perspective. So Asian frontier markets actually have been very impressive this year and a very strong performance. And it's a very strong outperformance actually, significant outperformance versus not only global markets, but also the region, which I think is more important, and shows the opportunities that Asian frontier markets provide, and also the diversification that they provide to investors. And just coming to the next slide. So like I said, it's a pretty strong year so far for the fund and also for Asian frontier markets. And as the chart on the top left shows you, the performance has been pretty strong against all global benchmarks, especially the frontier markets and emerging market index, which are slightly, low single-digit returns, while the frontier fund is up about 19.3%. And also outperformed the MSCI World Index, which is basically the US, the S&P 500. So it's pretty strong. And returns this year have been pretty broad-based. It's not just a few stocks or one or two countries which have driven returns. Returns have been driven, of course, by Iraq, because Iraq has done very well for us. But besides Iraq, it's also Kazakhstan, Sri Lanka, Vietnam, Cambodia, and also Georgia. So our stocks in all these countries have done pretty well, actually very well. And that's contributed to performance this year. On the negative side, we have some drag from Mongolia and Bangladesh, but that's I think the gains have been very strong in other markets, which has led to the strong performance. And it's not just this year which has been strong. I think over the last 3 years as well, especially post-pandemic, the performance for the AFC Asia Frontier Fund, as the chart on the top right shows you, has been about 6.5% annualized over the last 3 years. That's again ahead of all major regional and global indexes or indices. I mean, especially the frontier market index and the emerging market index, emerging Asia index, actually down 3.5%, of course, I guess because of China. But clearly, of course, that's a strong performance again. As I was mentioning, even Southeast Asian countries haven't really done well in the last few years, at least from a stock market perspective. The MSCI ASEAN index is about 3.4%. versus the AFC Asia Fund about 6.5%. So it clearly shows that the Asian frontier markets, it's a pretty strong story out there, despite so much of media publicity, or I would say investor noise about, say, Philippines or Indonesia or Thailand, etc. Well, the numbers prove to suggest otherwise. Asian frontier markets, despite all the issues they face since the pandemic, have done pretty well. And it's reflected in the AFC Asia Fund Fund's performance, which is up 6.5% in the last 3 years. So pretty solid performance across the board, not just this year, but also in the last 3 years. But as the next slide shows you, there's some key drivers, especially so far this year, in terms of what's driven performance. I think one key differentiating factor in Asian frontier markets has been the interest rate or the monetary policy environment in our markets. Of course, last year with the US Fed raising rates and also high inflation, high food costs, other macro headwinds, many central banks in our universe raised interest rates very aggressively. Sri Lanka, Pakistan, Kazakhstan, pretty much every central bank raised interest rates in our universe very aggressively in just a short period of time. Having said that, I think over the past year, especially since the beginning of the year, as we've correctly mentioned at the end of last year, interest rates and inflation have peaked out in our markets at least. We saw inflation coming off. We saw the macro headwinds abating. We saw more stability just generally across our markets. And that's given room for central banks in our universe to begin cutting or easing their interest rate hiking cycle, especially given that they raised interest rates so aggressively in the last probably 18 odd months. And so as the chart on the top left shows you, many central banks in our universe have cut interest rates, not very aggressive, but they've begun the easing cycle. Sri Lanka has been very aggressive in cutting interest rates because they also raised very aggressively. So they've cut interest rates by about 550 basis points since June 2023. But Vietnam, Georgia, and Kazakhstan have also begun the interest easing cycle in the last 3 or 4 months. And that's very contrary to what's going on in the West, especially the US and Europe. Stocks are higher for longer, maybe one more rate hike from the Fed. But I think given the fact that, like I mentioned earlier, the central banks in our universe raise interest rates so aggressively, I think they have enough room now to start cutting, because as the chart on the top right shows you, inflation has just come off significantly in many of our markets. Yeah, there's a bit of a base effect, but also the supply chain issues have improved. Food costs is better, food security / food supply. The commodity prices have come off their highs after the war in Ukraine. So all these countries have gone back to, almost all of them have gone back to single-digit inflation rates. Georgia is just about 1%, Sri Lanka is 1.3%, Vietnam is pretty much under control anyway, just about 3.6, 3.7%. Kazakhstan still double digits, but at 11% is much better than at 20% where they were just about a year, or just at the beginning of the year. So that's been a key driver for central banks and universe to begin cutting interest rates in their markets. So I think going forward, I think despite what goes on with the Fed or in the Europe, etc., and maybe even if oil price goes up because of what's happening in the Middle East, I think central banks in general, in our universe, maybe they will continue, I would say, being neutral / dovish in their monetary policies, because I think they've done enough in the last probably 12 to 18 months, and the other macro indicators are quite stable now. So I don't think they will start raising rates again, or have an aggressive interest rate hiking cycle again so soon. So that's going to be positive for our markets, especially in 2024. And also one more reason why Asian frontier markets have rallied this year, especially the AFC Asia Fund, as the next slide shows you. The valuations in our markets have been very attractive. So besides the discount rate coming down, interest rates coming down, I think one thing which has propelled stock market performance in our markets has been because of the lower interest rates. It's been backed by low valuations. So as the chart on the top left shows you, our AFC Asia Fund trades at a very low single-digit P multiple at 6.2 times, which is the lowest P ratio in the history of the fund. And many of our markets also, and stocks that we own, trade at these multiples, and that's why it's such a low multiple. So backed by low interest rates or easing monetary policy cycle and improving macro, you've seen these low valuations also get supported by an improvement in stock market performance. And it's and as the chart on the top right shows you, it's pretty evident that the market's still pretty attractive in our universe, despite a strong performance so far this year. So I think compared to the 5-year average P ratio, pretty much all the key markets in our universe still trade at a pretty big discount to where they were 5 years ago, especially countries like Pakistan and Sri Lanka, which is still very cheap. And also in general, the MSCI Frontier Asia Index trades at about 15 times versus 19 times. which is the 5-year average. But clearly, there's still more room to run given the low valuations. And I would say, as I mentioned earlier, the more neutral / dovish monetary policy environment in our universe compared to the West. So I think our markets are very well positioned for re-rating. They've seen a bit of a re-rating this year, but I would say in 2024 also, you could see the momentum continue more or less. And now I'll just talk about some of the top picks in our markets. I think for the last few webinars, we've spoken more of the macro, given what was going on globally with the war in Ukraine and high commodity prices, aggressive US Fed. I think, like I mentioned in the webinar at the beginning of the year, and also as we wrote in the report, I think those headwinds are behind us now in 2023, and that's exactly what's happened. So those headwinds are behind us. The markets, at least in our universe, have rallied. Performance has been good. So probably it's now time to talk about what we like in our markets from a stock selection perspective. So as the next slide shows you, I'll talk about five of the top picks. Of course, we have more topics also, but given the constraints on time, I'll talk about 5 names today. And I'll start with Kaspi, which is a fintech company in Kazakhstan. And it's our biggest stock position in the fund. We own it since the beginning of 2021. It's a little more than almost 3 years now that we own the stock. But basically, this company is the one which has actually cracked the whole super app model. You hear about companies in Southeast Asia and South Asia / India talking about super app, but this company's actually cracked it, and they actually make money. They're not losing money. They're not burning cash like the other fintech / tech names that are in emerging markets. So as the table on the top shows you, the last column on the extreme right, the net profits for next year is estimated to be about $2 billion, and they're growing at about 25%. Actually, they just declared results for the third quarter on Monday, and net profits grew by 40%. So very strong performance, and they should do about 30% plus growth for this year, coming down to about 24-25% next year. So very strong profitability compared to all the other well-known, and all the foreign investors love those other names like Sea and Mercado Libre and Paytm and Gojek, but some of them don't make money, and some have just about started making money now. And also one thing about Kaspi is trades at a PE of 8.6 times, as the table shows you. And so it's very, very, very profitable, very attractively valued. It pays the dividend. Being a fintech company, pays the dividend, does a share buyback. So it just shows you how profitable the company is. And also, as the table on the bottom shows you, I think it's one of the few fintech / tech names which is IPO in the last 3 years and whose current stock price is above its IPO price, and well above its IPO price, not just slightly above, well above its IPO price. While other names like Paytm and GoTo / Gojek in Indonesia / Southeast Asia are significantly below their IPO price. So it just shows you, especially now in the last 1 year, that profits do matter, and Kaspi makes a lot of net profits. So clearly, investors are rewarding it with a higher price compared to where the IPO was. And that's the next slide. Just shows you how the stock has performed. This is the stock price percentage change since we bought it in Jan 2021. And yeah, despite the correction probably during the war in Ukraine in March 2022, the stock is still up about 50% since we purchased it. But if you look at the other names, Sea, Mercado Libre, Grab, Allegro from Poland, they all down significantly over the last probably 2.5 years. And like I said, the profits matter, and that's why Kaspi stock price is outperforming. And the next stock I'll talk about is TBC Bank in Georgia. That's another name we like. Basically, it's the biggest bank in Georgia, one of the 2 biggest banks in Georgia in terms of market share. And it's very profitable. They'll do about net profits next to about $540 million, which is not a small number, but trades only 3.8 times, ROE of 26%, strong earnings growth. And also give exposure to Uzbekistan because they've launched the first digital bank in Uzbekistan, which is doing very well, and is also profitable now. So that's it. And the stock has almost doubled since we bought it little more than 2 years ago in September 2021. So again, another strong play. It's actually the second biggest weight in our fund in terms of stocks. So it's the second biggest stock position. And the next slide, I'll talk about some names from Vietnam that I like. Some of the large cap names. So one name is FPT. It's a technology company. Well, it's a software outsourcing company, but they also have an education business and a telecom business in Vietnam. But the software outsourcing business is what has been driving growth and profitability over the last probably couple of years. And as this table shows you, it's not a small company by any standards. It's now competing with all the Indian players in deals in the US and Europe and Asia. And if you look at the revenues for next year, they're almost similar in size in terms of with respect to the other Indian mid-size IT companies, and similar profitability, trades at a cheaper multiple, similar ROEs. So they made big inroads. I think one key factor going forward is with the US wanted to partner with Vietnam to improve its technology supply chain. FPT could play an important role in terms of R&D, semiconductor education, etc. in Vietnam. So that could be a big driver of FPT's growth in the future. As the US wants to de-risk their technology supply chains, FPT could become an important partner for US companies in Vietnam and also in the region. And again, the next slide again just shows you the stock price performance since we bought it in December 2021. Stock has outperformed. Again, it's a quality name, so it's outperformed the index. The index is down since December 21, but the FPT is up quite significantly. So strong performance there. And the next one is another Vietnamese company that we like. It's the second biggest position for our Vietnam exposure in the Asia Frontier Fund. The Gemadept is the biggest private port operator in Vietnam. They own very well-established and well-located ports both in north and south of Vietnam. So in my view, it's the best proxy for, if you want to play trade, play Vietnam's trade story, this is the company to look at because they have, like I said, they have sort of scale, very good locations for their ports in both north and south. So if you believe that Vietnam is going to benefit a lot from the manufacturing shift from China and trade is going to grow, given their free trade agreements with many parts of the world, this is the best proxy in my view for playing the Vietnam trade/export story. And as the chart on the top left shows you that the volumes that they've handled for containers has basically grown by about 15% over the 15% annualized over the last probably decade, from about 1 million TEUs to about 3.1 last year. So very strong performance, and that's basically come from new capacities that they put up, and they're putting up new capacity even now, which should come online in the next probably two or 3 years. And again, as the chart on the top right shows you, it's been a strong performer versus the index since we bought it in July 21. The stock is up more than 50%, while the index is down. So again, a quality name, and it's outperformed the index. That's what we focus on. We focus on quality names for the Asia Frontier Fund, which can give us good returns in the long term and also outperform the index. And the final name I'll talk about is actually a name in Sri Lanka. It's a small cap name. A mid cap. This would be a mid cap actually in Sri Lanka. Sunshine Holdings is actually a very well established consumer/healthcare company in Sri Lanka. Very well known brand, good management team. It's actually the biggest. It's got the most well known and well established tea brand in Sri Lanka. It's got the #1 market share, even higher than Unilever. So they've got close to 50% market share in the retail tea market, which is much ahead of Unilever in Sri Lanka. And they've got the second biggest pharmaceutical distributor in Sri Lanka as well. Trades at about 7 times, very strong earnings growth. And again, strong stock performance as the chart shows you versus the index, and also their closest competitor/peer, which is Hemas, whose stock price actually is down in the since we bought this stock, while Sunshine Holdings is up significantly. So it just reflects on the company and their execution capabilities. And in the following slides, I'll just talk about some of the trends I've spoken about before as well in the previous webinars in terms of supply chain shift. I think, as everyone knows, I've spoken about this before, and also Vicente will talk about how the how the US president's visit to Vietnam is a very big deal for Vietnam going forward. But in general, I think Vietnam is a key beneficiary. In fact, it is the biggest beneficiary in Asia from the whole supply chain shift, and they will benefit going forward as well. And as the next slide shows you, not just Vietnam, also Bangladesh is benefiting a lot from garment exports. They're the second biggest garment exporter globally after China. They're getting market share from China. Exports are still growing in the last 12 months despite the global slowdown. And on the next slide, even Central Asia is benefiting from the whole, all the conflicts/issues in Russia or that part of Europe. And especially Georgia is benefiting a lot because many supply chains are moving via its Black Sea port, because it also has a Black Sea port on the Black Sea coast, which is doing very well. And as the chart on the top left shows you, the exports have done very well over the last few months since the war in Ukraine began. But those are just, and I've spoken about this before, so I won't spend much time on this, but I'll talk about how I want to end this, my part of the presentation with the key message on the next slide. So I think, so like I mentioned, the Asian Frontier Fund and also Asian Frontier Markets, a very strong start to the year. And I think we've been saying since the beginning of the year that the key headwinds are behind us and our markets should do pretty well because they were trading very cheaply at the start of the year. Inflation and interest rates have peaked out, and so far the call has been pretty correct. And especially since our webinar in July 2023, we mentioned we are bullish on Pakistan and Sri Lanka, and both have rallied. But I think now I think what matters is what happens probably going into 2024 and also what happens in 2024. So I think, yeah, maybe there could be some softness in the markets because one, our markets have done very well this year. And two, you have this talk of, higher for longer interest rates in the US and also in Europe. So maybe there could be some stresses, some volatility, some uncertainty from amongst investors, plus what's going on in the Middle East. That'll kind of keep a cap on, exuberance from investors. But I'm not so concerned because I think in general, our market's pretty well placed now. So even if firstly, if there's higher for longer by the US, like I mentioned, our markets have anyway gone through a pretty tough macro situation in 2022. They raised interest rates very aggressively. So in fact, they have more room to cut interest rates because the macro situation stabilized and inflation's come off. So I'm not so concerned about higher for longer in the US and how it impacts our markets because our markets are now quite well positioned. And secondly, the oil price goes up. I think again, I'm not so concerned as I was probably say 18 months ago, because countries like Bangladesh, Pakistan, Sri Lanka, which oil importers are actually all an IMF program now, that FX positions have improved, the macro situations improve. So if oil goes back to $120, fine, they'll face some headwinds, but it's not existential for them like how it was 12 months ago. So again, that's not as much of a concern to me now. So I would say if there's any softness in the markets, that's a good time to add, because as Asian frontier markets have shown, like in 2021, they rallied after the pandemic, and this year they've rallied after being hit last year. So any softness would be actually a good opportunity to add because valuations are cheap. And next year, I think our market's in a good position. Interest rates are coming off. They'll remain low, I think, or remain neutral to dovish. You have very attractive valuations, recovery in earnings, and also political clarity because you have elections coming in Bangladesh and Pakistan. And that should provide some clarity for the markets. So overall, I would say, I think our markets, especially, I think in my view, I would be contrarian and say Bangladesh, Pakistan, Sri Lanka could rally next year and still perform and do quite well. So I would wrap up with saying that I'm quite positive going forward on our markets. And with that, I'll hand it over to Ahmed Tabaqchali, who is the Chief Strategist of our AFC Iraq Fund. Over to you, Ahmed.
Thank you, Ruchir, and thank you everyone for taking part in attending this thing here. Now, as you mentioned, as Ruchir mentioned earlier, that Iraq had so far a phenomenal performance. With as of today, we're for the month we're down 0.8%, but we're still up 88.8% for the year. There's a multiple eights in the story here. But given that, by the way, I wanted to put the gains of the year in perspective of the Iraq investment pieces that I have, in a way, to put it in context. Basically, when the fund was launched almost 7 years ago, the investment thesis that we had was basically the fact that the country's vast potential sits on 5th largest oil reserves, 13th largest gas reserves, and a young country with a large growing population and also a fertile land, had an enormous potential that was held back by over 40 years of conflict. I mean, people right now are worrying about events in the Middle East. I think we can obviously address that when questions come in. But what Iraq has been through for the last 40 years or so, last 45 years, pretty much puts almost every conflict you can think of in context in a way. I mean, we're talking of, almost 8 years war with Iran, followed by the invasion of Kuwait, and 13 years of one of the worst sanctions one can imagine, worse than any sanction put on any country. You look, then you have the US invasion, then you have civil war, insurgency, and when the country began to breathe, you have the ISIS conflict. So basically, the investment idea was basically as the country ends its 4.5 decades of conflict and looks at peace, there's going to be a huge peace dividend as it catches up with the world in terms of almost all developments. Now, fast forward a few years, and what we have right now is a relative stability that I've been talking about for the last few months on the Iraq news. And the relative stability, by the way, even in spite of the fact that we're looking at something like COVID and what have you, for us, these are pretty much nothing compared to the prior conflict, but crucially, they did not feed into self-reinforcing cycles of violence. And with it, then our investment thesis has been seen almost in action. The first was what I had showed earlier, because basically what happened in the relative stability, you have an environment where there's really a degree of predictability. With predictability, businesses and individuals can operate properly, can plan on capital investments. And that's exactly what we're seeing, what I've seen. I've been living in Baghdad almost on a daily basis for the last 2.5 years. But then for the most of the year, I was between Baghdad and another city since 2018. Now, the thing is to keep in mind, by the way, is I mentioned it in two things. One, there was an article about supermarket stability, and the other one was last webinar where I looked and showed pictures of the enormous construction activity taking place in Baghdad. To put it in perspective once again, and I'm using that word maybe too often, the word perspective is Baghdad is a city, or Baghdad is a city of right now, let's say about 9 million people. That's what the official or the estimates, the UN estimates showed could be higher. But it's seeing a wave of construction activity that it has not seen. But, and again, I'm repeating myself, but in context, the first time, this is a city that has basically the same infrastructure, or had the basic infrastructure it had when it had 2 million people versus currently almost 9 million people. And so you can imagine what stability brings in, and that's what I tried to show last time. This time, what I hope to show you is the engine that will keep the economy growing and provide really basically the next cycle for the market, or the next sort of leg up for the market, and that's the banking sector. The banking sector, as almost all of you know, without a banking sector, there is no private sector and there is no economy, so to speak of. Now, in here, what I'm showing you is broad money as a percentage of GDP, and you can see Iraq. Obviously, you have a missing layers of data that was during the worst of the conflict. It lagged the region in a significant manner. But since the early 2000s, and certainly since we began investing in the country, you can see with the green line on the top right hand chart, see that is growing and it's increasing. Now, and evidence of that has been in what you've seen and what I meant by the relative stability of the past few years, which is basically since the end of the ISIS conflict. We're talking end of 2018. Then you'll see the sharp growth in private sector loans and deposits. And that's been a phenomenal figures, and we're seeing more of that. Part of it, what helps it, is the positive macro backdrop that Iraq benefits from, which is the same thing that can hurt it during the bad times, and that's in extreme leverage to oil prices. So that finishes the first part of the chart. If I may have the second chart, Peter, please. Now, putting all of that in, that gives you the idea, in spite of all of this, in spite of all the returns that you've seen, a wonderful returns year to date, with the thesis just happening, as far as the way I see it, is that, yes, it's a wonderful seeing the development of this year, but that's only a portion of what we saw when we envisaged investing in the country. And that's really gives you the chart of our benchmark, the RSIS index. And it shows you, by the way, even after all the gains this year, it is still something like 33% below its peak. Our investment thesis is that it regains the peak and moves higher, moved by first of all, by the development in the banking sector that is seeing a massive growth in their earnings. By the way, by one of the things, the benefits of it has been benefiting from being supercharged by developments with the currency, which is quite positive for them. And you can see the figures there. So I'll end it with looking at comparing it to the other markets. As you can see, Iraq had an enormous base to work from, and it's just beginning its rise versus everybody else, which has seen a massive gain in the past. We are just beginning, and I think with that, I thank you for your time, and I pass it on to my colleague Scott, who looks after our Uzbekistan. Thank you for this.
Thank you, Ahmed. Good day, everyone. So before I get started, this is a picture from our most recent Uzbek tour that we did in September, and we're visiting the biggest steel plant in Uzbekistan, which is our second biggest holding, and it's one of the biggest steel plants in Central Asia. So on the note of an Uzbek tour, we mentioned it in our last newsletter, and we'll be mentioning again in the next newsletter the dates, but the plan is the 19th to the 21st of May, 2024. So if you're interested, get in touch. Again, we'll write this in the newsletter, and we're looking forward to another fun tour. Next slide, please. So a quick macro update. Uzbekistan continues to do really well. Again, as we've been saying since really the start of the fund, the secular growth tailwinds that the country has in a world that's, or in a region that's integrating is really something exciting, especially with all the global volatility that we have. So earlier this month, there were 2 Eurobonds issued, which were roughly 3 times oversubscribed. One was denominated in USD, the other in Uzbek Sum. And the Uzbek Sum bond actually ended up getting priced at about 200 basis points below where it was initially going to be priced. So there's good demand for Uzbek Sum denominated debt and Uzbekistan in general, which is really encouraging considering what you're seeing with yield curves, especially in the West, spiking up. The economy, again, is doing well. Inflation came in at 9.2% annualized in September. We expect that inflation will remain between, say, 9 and 11% into the future, even with the currency selling off a bit this year. It's a fast-growing economy. The country's importing a huge amount of goods, so it has a trade deficit. And 9 or 10% or 11% inflation really doesn't look that bad compared to a few years ago when Uzbekistan had 10 or 11% inflation and the rest of the world had 1 or 2% inflation. As I've been saying, sort of the past 6 months or year, Uzbekistan's inflation rate is relatively stable. It's high single digits, but if you look at what's happening in the rest of the world, inflation is, specifically the developed world, inflation is high single digits or mid single digits. So on a relative basis, factoring in the type of growth that you're getting in Uzbekistan, it's not really a concern to us, but it's something that people bring up every once in a while. And on that note, GDP in the first 8 months of the year, or 9 months of the year, grew 5.8%. And the IMF is predicting a GDP growth of roughly 5.5% through 2024. So again, the economy remains strong, and that should continue to be the case. On tourism, when we first went to Uzbekistan, tourism was pretty much non-existent. I think there were about 700,000 tourists in 2019 from countries not around Central Asia, so it was peanuts. And this year, in the first 8 months, we've already seen 4.3 million tourists versus 5.2 million for 2022. And when we were in Samarkand doing our investor tour, it was very obvious that tourism is increasing. You heard languages, French, Italian, German, Hindi, Chinese, Japanese, Korean, Russian, obviously, English. So it's getting on the map of tourists worldwide. And part of that is with more regional connectivity. Vietjet is already doing business in Kazakhstan. They're looking to come to Uzbekistan. AirAsia X is planning to start launching in the next few months flights direct from Kuala Lumpur to Tashkent. And then, of course, you have a slew of Chinese regional and regional airlines from the Middle East, which are already doing business in Uzbekistan. And they're not just coming to Tashkent, they're also coming to second-tier cities. So if you look at what's happening, and that this year we'll probably get about $2 billion generated from tourism in the country, the next few years should be a very big bright spot when it comes to tourism. Next slide, please. So on the capital markets, for probably the past year and a half, I've been talking about this capital markets legislation, which is relatively comprehensive and which really was too big to get passed with ease. And we probably have another year or so until it does get passed in Parliament, but they're working through it. What was encouraging, though, is that on the 4th of September, right after I put out our most recent update for the Uzbekistan Fund, there was a presidential decree which was signed on effectively accelerating development of the capital markets, which for us was a big green light that the government is actually serious about developing the capital markets and creating an alternative financing mechanism that functions relative to companies getting debt from banks, which is prohibitively expensive. So there's a new regulator which is taking over. They've already taken over, but they're going to start implementing these things from the second half of next year. And the regulator is independent of the previous one, or it's independent of the government, is the previous one was under the Ministry of Finance. So in due course, we imagine that the majority of the staff that was at the Ministry of Finance under that regulatory body is going to migrate to this one. And some of the positive developments that are in the presidential decree include tax breaks for investors. Specifically for us, which is most important, is that there's no capital gains tax, which has always been the case, but that dividend tax is going to remain at 5% through 2028, where previously I believe it was 15%. And there's also going to be incentives for Uzbeks to invest part of their salaries into the capital markets to offset taxes. So the government seems to be creating incentives for Uzbeks to start allocating some capital into the markets, which is a win-win for the government and certainly for us. And then two big things are that by mid-2025, touch wood, Clearstream will start doing business in Uzbekistan. We need this new capital markets legislation to be passed and some other legislation to be passed, but hopefully by mid-2025, we have Clearstream doing business with the Tashkent Stock Exchange and the Central Depository. And this presumably happens in line with the regulator working with the central bank to allow for foreign brokers to operate sub-accounts. The big problem, as I've mentioned time and again, is that it's very bureaucratic to open a local brokerage account. The ability for a foreign broker to partner with a local broker, which some have already done, and there's others that are coming that we're aware of, that in some cases have hundreds of thousands of clients, which are going to be marketed in Uzbekistan. The functional operation of sub-accounts would be a huge boon for liquidity and general transparency in the market from the standpoint of the international investment community seeing that Uzbekistan has a stock market and there's opportunity on the ground. So everything remains positive in the country. And yeah, we'll mention a bit more in our next newsletter about this upcoming investor tour. So with that, I'll pass it off to Vicente Nguyen, the CIO of our Vietnam fund.
Thank you very much, Scott. Hello, everybody. Please go to the next slide, Peter. So at the beginning, I would like to share with you the overall picture about the Vietnam economic and how what's going on in Vietnam in the last 3 quarters. And if you look at these charts, you can easily find out that the worst situation, the worst time in Vietnam is over already. If we look at the GDP growth in the first quarter, is 3.3% only in the first quarter. This is completely low level in many decades, except for the COVID period. And however, in the second quarter, the GDP growth gradually improved step by step to 4.1%. And in the third quarter, with many stimulus policies from the Vietnamese government and the huge public investment package of the government, it pushes GDP up to 5.3% compared to last year. And according to our estimation of the Vietnamese National Assembly, they estimated the fourth quarter, the GDP in the fourth quarter, it could be around 6.5 to 7% to close the whole year GDP growth at around 5%. So what we can say that right now, the worst situation, the worst time of Vietnam economy is over already. Now everything is getting better and better. If you look at the FDI, FDI investors still very confident to pour money into Vietnam, and Vietnam still one of the best destination for international investor. The reason why the third quarter FDI disbursement increased 9.5%, and in the first 9 months of 2023, the total FDI disbursement reached nearly $16 billion. This is the record high of Vietnam economy since 1986. The last thing we can see that the export growth, even though it's still negative growth, but we can say that the negative growth already narrowed and is improving. So in the third quarter, the export revenues, growth still down around 1.4%, but actually is already show some positive signal, especially in September. The export growth already positive. This is the first positive month in 2023 of Vietnam. So actually, I, as a portfolio manager, I'm very confident and very, bullish on Vietnam economy that is on the way back to the normal growth. So, and in 2024, the GDP growth can reach around 6% or even a little bit higher. So Vietnamese government is supporting the economy very aggressively by rate cutting, by tax cutting, and a lot of policies with a huge public investment package to push the economy up and try to make it grow again. Go to the next, please, Peter. In the last quarter, there's one event that I think is one of the most significant events for Vietnamese economy for the whole country, not only in this year, but also in the next 10 years. So President Joe Biden officially visited Vietnam in September, and we already signed a historic deal to upgrade the partnership between US and Vietnam from comprehensive partnership to comprehensive strategic partnership. This is an amazing and over expectation of Vietnam, because Vietnam, I think, in overall, in the turbulence of the world economy, of the world political turbulence everywhere, Vietnam is one of the rarest country in the world, has the highest partnership with the two largest economy in the world. It's US and China. With China, we signed the comprehensive strategic partnership in 2008, and after 15 years, we signed this deal with US, the largest economy in the world. So actually, Vietnam stands completely outside on the turbulence, on the chaos, on over the world, including economy or political. So we are one of the rarest beneficiary in the world. And actually, how this partnership, how this deal can support Vietnam in the next 5 to 10 years, in our view. Please go to the next. Actually, 10 years ago, in 2013, President Barack Obama came to Vietnam, and we signed a deal comprehensive partnership in 2013. At that time, the GDP growth of Vietnam also was very low, around 5.5%, because during 2012 and 2013, Vietnam also faced a real estate crisis. So the GDP growth at the time was very low. However, the deal between Vietnam and US already supported the economy. So after we signed this deal with US, within 10 years, the total export from Vietnam to US accelerated from around $20 billion to more than $100 billion in 2022. And actually, after we signed this deal with US, a lot of countries, they are allies of US in Asia Pacific, like South Korea, like Japan, like Taiwan, like Singapore. They came to Vietnam and set up the factory. Actually, everybody knows that they would like to take advantage on this kind of deal. So they came to Vietnam and put a lot of money into Vietnam, build factory, produce product, and export to US and all over the world. So one of the key investors in the last 10 years was South Korea. Please go to the next. So as everybody knows, South Korea is a very important alliance of US in Asia Pacific. So since 2013 to 2022, South Korea already put more than $63 billion. $63 billion. That's a huge number for a small economy like Vietnam 10 years ago. So they came to a lot of multinational groups like Samsung, like LG, Hyundai. They came to Vietnam and built huge factory. For example, Samsung, they already put more than 20 billion US dollar into Vietnam in the last 10 years. So they produce mobile phone, computer, and export to China, to US, to Europe, and everywhere. So a reason why Vietnam can grow very fast in the last 10 years. So this time we upgrade the partnership with US from comprehensive partnership to comprehensive strategy. This is the highest level in the partnerships between two countries. So we expect that the FDI from other countries, from South Korea, Japan, Taiwan, or Singapore, continue to come to Vietnam. And we also expect another FDI movement from Europe or from US will come to Vietnam to set up a factory and produce product and export to US and other areas like Eurozone into Europe. So we think that this kind of deal can support the Vietnam economy significantly in the next 5 to 10 years. Go to the next, Peter. And this has really supported the economy of Vietnam since 2012, 2013. As I said before, in 2012, the real estate crisis really damaged the Vietnamese GDP growth, 5% only. But after we signed a deal together with all the stimulus policies of the government, the GDP growth increased step by step and reached 7% in 2008. This is very high level, and it's also support the stock market increase 175% since 2012. So the index already increased around 300 points to 1,100 points in 2018. So it's up 170% in only 5 to 6 years. So I am right now very bullish. We are come back the same level like 10 years ago. Peter, can you go to the next slide? We're coming back. An opportunity already happened 10 years ago in 2012, 2013. You can see the valuation of Vietnam right now is same like last year, last 10 years. So AFC Vietnam already entered Vietnam in 2013, and we took the advantage, we took the opportunity, and we already improved the fund. And after 10 years, opportunity came back again. This is incredible. So I am absolutely confident and very bullish that we continue to catch this opportunity again. So a reason why, for example, for me, personally, I just surprised into the fund in just a few days ago, because I am very confident and bullish on the market that in the next 5 years, we do not know in the short term, maybe it's volatile, up and down, few percent, but absolutely, if we look at a longer term, like 5 years, I am absolutely sure the market will recover and we can catch this opportunity and enjoy the benefit. So thank you very much.
Yeah, thanks, Vicente. That's called conviction by our fund manager.
Yep.
Thanks, Ruchir, Ahmed, Scott, and Vicente for the interesting and insightful presentations. We will now answer some of the many questions we have already received from the audience, but you can still submit more questions during this Q&A session through the Q&A button at the bottom of the Zoom screen. So the first question I'm going to answer is, what is the AUM of the Uzbekistan fund currently versus beginning of 2023? Right now, at the end of September, the AUM of the Uzbekistan fund was 17.3 million versus 16.8 million at the end of 2022. And we have received some more subscriptions in October. So the AUM will be around close to 18 million by the end of October, hopefully. Then the next question is to Scott. Could you kindly comment on the status of bank privatizations in Uzbekistan?
Sure. So the government's planning to privatize, as I've mentioned previously, vast swaths of the economy. Some of the banks are potentially going to be privatized. Really, for the time being, nothing is on the docket to be privatized, besides, of course, Ipoteka Bank, which was sold earlier this year to VTB from Hungary, but OTB, excuse me. But there's nothing else really on the docket for privatization. And certainly through the stock market, they need to pass this capital markets legislation before there's a possibility to do that. So we're waiting and watching. When there's banks that are up for privatization, I'll certainly be mentioning it in our future newsletters.
Okay, thank you. Then question maybe for all of you except Ruchir, because you answered it already. Could you please provide the investment case for the fund's largest position or stock position? So maybe Ahmed, if you want to start, I think yours is National Bank of Iraq, huh?
Well, basically, the investment story is in a way exactly what I said earlier in the cover when I covered basically the growth in loans and deposits. The bank has been growing. It's actually the figures and charts are available in the presentation. The bank has been growing its loans and deposits in leaps and bounds. I haven't got the figures in my head right now, but they've been growing incredibly fast. There, the banking opportunity in Iraq is massive. I mean, as much as one can put a word massive, this doesn't even come close to it. And the bank has been growing earnings substantially there. So it's a perfect play on the Iraq macro story, which basically says as adoption of banking increases, banks increase loans. With the increase of loans, their earnings will grow and their book value will grow by leaps and bounds. We've seen that so far. In the year, the stock has almost 5 times since we first bought it, and I think it's likely to grow more. I'm conscious of time, so I'll stop here.
Maybe Scott, yours is Hongkong Bank, so far I remember.
Correct.
So what's the investment case there?
The investment case there is that you've got the biggest private bank in the country, which is growing very quickly. Equities compounding at about 35-40% year over year. They're increasingly getting soft loans financing from international development banks. And the country has very low debt levels, both at the sovereign and the individual level. So is the country basically leverages up, as you've seen in every East Asian, Southeast Asian country, banking is a good place to be. And what's nice about banks, since I'm not really fond of banking in the West, with all the derivatives and whatnot, and balance sheets are murky, is that banking in Uzbekistan is vanilla. They get deposits, they lend out money. That's it. So it's very easy to understand their business.
Okay, and Vicente, yours must be an insurance company, I assume. The biggest position in the fund.
Can you repeat? I cannot hear you very clearly, Thomas.
Yeah, so the question is, what is the investment case for your fund's biggest position? And I think in the Vietnam fund is an insurance company. I don't know which one at the moment is the biggest.
Actually, insurance used to be the largest position of the fund. However, because we restructure our fund a little bit for the next 5 years outlook, so the reason why we switch from the high dividend stock or defensive stock like insurance into the growing one. So at the current right now, the largest position of AFC Vietnam fund is an export company. So TNG is a very fast growing exporter in Vietnam. Is one of the key manufacturer for Decathlon, a French fashion company. So it has a very fast growing history in the last 15 years. So this company has a very good record very good management. I met the chairman 10 years ago, and I followed this company around 10 years. And he is simply just how to say, focus on his own business. He doesn't care about anything about the stock market or something like that. So he already turned the company from a tiny company with the profits of around $2 million, and right now it's $20 million, $10 million. And the companies keep improving. So with on what I already present about export, I expect the export company and the export of Vietnam will accelerate in the next 10 years. And particularly the export will recover from the bottom. So the reason why we chose this company, and we expect that this company will benefit from the deal with US and the recovery of the export. So the reason why right now it's become our largest position.
Great, thank you.
Yep.
Next question is again to all fund managers, basically. What do you think is the impact of the tensions in the Middle East on the holdings of your funds? Ruchir, if you can start maybe.
Yeah, I mean, it's a pretty broad question. So, I mean, I think the first issue or the first impact is basically, I think, the impact on oil price, because that's more critical, especially for some of our markets like Bangladesh, Pakistan, and Sri Lanka, which are net oil importers. So yes, I mean, if oil price goes back to 120, like I mentioned in my comments, that'll be headwinds for these markets, but it's not existential like how it was last year when the war in Ukraine was going on, because I think these countries are now have a much more stable macro position. They have an IMF program, inflation's come down. They're seeing improvement in, say, remittances and tourism, like in Sri Lanka. So there'll be headwinds, but it's not going to be as bad as it was last year. And on the positive side, I would say because of higher prices, some of our markets actually do benefit because of tensions in the Middle East. So Kazakhstan is one of the biggest oil exporters globally. They will benefit from macro perspective. And of course, as Iraq also will benefit, because Iraq is part of our Asian Frontier Fund universe. They will also benefit from high oil prices, as Ahmed can explain or elaborate on. But in general, yeah, I mean, broadly, it's for most of Asian countries in general, it'll be negative if the oil price goes up higher.
Okay, and Ahmed, in this case, must be
Yeah, I
very
mean,
positive for your fund.
Well, for us, for Iraq, two ways. I mean, basically, I don't think you need, for example, much analysis from me when it says, could the conflict spread? I mean, newspapers cover that by the ton. The basic thing I can say in terms of, at least when I look at the region, you look at the frontier countries, basically ranging from Egypt to Lebanon to Syria to Jordan. All of them are trying to avoid conflict one way or the other. Also, the powers in the region, like Saudi Arabia and Iran, are working towards de-escalation. So I think it is a serious situation. But for Iraq, even in that context, Iraq is not one of the front countries. So basically, even in the worst case scenario, it is highly unlikely to be influenced or dragged into conflict. It's not in any way there. Obviously, it's reasonably close, but it's not in that context. However, as Ruchir was saying, in terms of the oil prices, I think even when there is no conflict, and I think that's increasingly possibly likely given how de-escalation is taking place, even if there is no conflict, oil prices have changed significantly. The first change happened in 22 following the invasion of Ukraine, when oil began to have its old risk premium that comes from geopolitics. I think after this, certainly the Middle East will change, even as I said, without conflict. And I think with that, you will have a higher oil price environment, i.e. more factors adding to the higher price. Iraq is extremely leveraged to oil prices. And it's in that case, it will help the government maintain its high spending cycle. And therefore, our economic boom will likely continue.
Okay, and Vicente, we are now 1 hour. Please have the last comment regarding this question.
Actually, Vietnam doesn't really have a lot of trade with the Middle East countries, particularly with Palestine or Israel. So both countries contribute less than 1% of Vietnam trade every single year. So that directly impact, I think, not really much, maybe, but if the tension over there spread out, it can make the oil price increase and create a high inflation in the West, like US or Europe. So it will make the consumptions a little bit weaker. But however, if this scenario happen, it will impact on the market, not only Vietnam, and Vietnam has only, how to say, indirect impact, not a direct impact. So I think in that situation, everything is look not very beautiful, but Vietnam still have less impact. I think so.
Okay, great. Thanks a lot, Vicente. So this concludes our webinar today. And since we still have some unanswered questions, we will answer them directly by email to you. And if you have further questions, you can always reach us by email. I hope you enjoyed this webinar. We will continue to hold quarterly webinars in the future, and we will announce them in our upcoming monthly newsletters. Take care, everybody, and enjoy the rest of the day and wherever you are right now. Thank you. Bye-bye.